Let's go live now to Evan Lucas. He's a Chief Market Strategist at InvestSMART. We've been all eyes on Brexit this morning. I imagine investors have too.
They are indeed. And the way to look at it is actually what happened very, very quickly, Laura, to the pound. And the pound is actually quite astounding at the moment. The market is very clearly saying that it actually wants Brexit to happen. And that, I think, needs to be put out there. For the last 7 days, the pound has actually appreciated just over 7%. To put that in perspective, that would be like a blue chip stock in Australia appreciating 20%. So very clearly, very strong movements as we've seen the EU deal come ahead, the fact that Johnson could go back to Parliament and do that. So this morning it has slipped and slipped quite significantly. It slipped a full US cent, so around about just over 1% off the back of that news. It's still seen as positive because as we've been talking for the last sort of hour since this all happened, it's starting to move up again. So the market is understanding that obviously we probably have to wait till January if this deal's going to go ahead. As you sort of interviewed in your previous numbers, there could also be possibilities of second elections, whether or not a second referendum comes in, all that as well. That actually would probably be seen as a negative in terms of a market's eyes. It just creates more volatility, more uncertainty, because again, the question that always comes with a second referendum, what is the question? A yes-no answer again to what does Brexit mean would be very, very hard to frame, and how the country would respond to that would be a real big uncertainty. The amount of money already spent on this, therefore, also makes the markets uncertain. So from the pound perspective, from a FTSE perspective, they actually want Brexit to now get on with it and happen because they need to now look to the next decade.
What you were just talking about the pound being so strong up until today, this little slip of its, this little slip, I should say. Yes. What was behind it going so well? Because even before today, there'd been a lot of uncertainty.
Yeah, if you look at, and that's a very good question, Peter, because if you look at it from a really, really micro level and actually zoom right into almost to the hours, as you said, there are things that would certainly look at the uncertainty. But in general, it's been that we've been getting more and more direction, particularly from the European side, that they are actually willing to support this, willing to actually get on board. The big change and the bullishness in the pound was when around about October 9th, you started to hear coming out of Frankfurt, coming out of Brussels, that there was probably going to be some concessions around the Irish backstop, that maybe they could sort of work with the idea that the customs union would be the Irish Sea rather than the Irish border, all of that kind of material. Then obviously Johnson was going down that route from the start. So to get that deal, all pushed it all the way up. And the interesting thing, just to sort of add to that even further, because you're right, the uncertainty was there. The pound actually appreciated when the DUP, so the Democratic Unionist Party, walked away from it, which in itself would be seen as a negative, I would have thought, considering how razor thin, numbers he's got on the floor. But if you listen to what is coming out of 10 Downing Street, if you listen to what is being said in the public by soft Tories, rebel Labor MPs, it suggests that the numbers are almost there for him and that some deal, particularly the one that's now on the table, will probably pass. It's just a question of when. So all of that's why the market has probably gone the way it has.
Okay, well, let's look closer to home. The RBA, we're fast approaching the first Tuesday of next month. That means the RBA will look to potentially cut rates again. What's your intel on that?
Yeah, and so that's the interesting question. I actually had to go back a long, long way to work out when's the last time we've seen 4 cuts in 6 months, because that would what it would be if we saw it on November 6. And that is, November 5. It looks unlikely. The market, however, sort of has it at around about sort of 47% chance. And the reason it's on the radar today is that Kent, Deputy Governor Kent, he is a very, very high proponent in regards to their monetary policy and also money markets. He speaks quite technically, but he is a big, big driver of this because it's basically his area of control. He reports back to Philip Lowe on this space, what it's doing to the overall funding markets in Australia. And he's been quite dovish in terms of where he sits. So what I mean by that is that he's actually quite, conservative. He does actually believe stimulus is still required, and he's likely to tell you that again. So there is a possibility. I think we'll have a greater clarity, Laura, next week, because this time next week on Wednesday, the 23rd, we will actually get our third quarter CPI, so our inflation figures. And they are likely to show that, again, inflation is not only soft, but probably actually starting to show a sign of what we call disinflation. We've got inflation, but it's going backwards. And that is, again, part of the issue that the RBA is facing, that consumers are slowing down, that the overall economy is just not moving the way they want. So keep an eye on his speech today. I know it's not normally something you probably see in mainstream, but it is very clear that one of the biggest players on the RBA board is very much of the view that, again, we may actually have to go harder, stronger, and that 2020 could actually see, the raise of the idea of QE, and that's all what he's talking about today.